Hi guys, welcome back. So let's start by looking at the Seng index today. It is still looking very weak right now, which is somewhat expected because it was the weakest index in the whole world last year in 2021. But we do not expect it to get the champion of the worst index for 2 years in a row. So even though it's starting very rough this year, I still think Seng index will perform better than the US index this year. It's just at the beginning, we need to experience a rough ride because of the war right now. At the beginning of the year, we were looking at the US reducing the QE while the Chinese government is doing the complete opposite, which is to increase leverage. After removing the margin for the whole year last year, the market has really dropped to the support of the major trend line, right? This red line that has been supporting the Seng index since the beginning for the past few decades. So this is the part that was dropping throughout last year. We can see that all the regulation, the bad news coming out from the government had what I believe intentionally brought the index back to this trend line to squeeze out all the FOMO because they were having some cautious. I think the CCP knew that there would be some kind of crash coming in this year, whether it's to deleverage in the US market or some other risk going on that drives the US market or other assets down. There might be a crash coming. So that's why in order to prevent the systematic risk, they had a lot of regulation and bad news coming out last year to bring the index back to this long-term stable trend line that happened to be the protect of the index for the past few decades. So I would say right now the Seng index is the only index in the world that might have a really long-term protection because it's close to the PB ratio of 1. So a lot of stocks you are buying in the book value, much safer than the other assets in the other markets. But in the short term, it's still looking very, very weak. There is almost no sign of rebound, not even giving us any hope right now. So it was reaching 223 the day before, and today, following the US market correction, you can see the future has already reached to 22,000, almost breaking 22,000. So 22010, the lowest, close enough. So 22,000, it's a round number, so it is a psychological support. Not a strong one, but still a small support. If it's broken, then we are looking back at the low of COVID crash, which might indeed scare a lot of people then, because it was the low of COVID crash. So back to the main index. Let's take a look at the COVID crash. It was here, reaching the low of 211. Let's hope there is no new low from there. But it only got to a super sharp dip on one day, going from the high of 223 to the low of 211. Wow, up and down almost 1,200 points one day. But I will take the closing price. On this day, 217. Okay, 217 to be the next support for us right now. So that would be coming back here. Actually, not too far away. Especially the future today already got to 22,000, right? So 217 is just 1.2% away. So let's mark it down and see if it can get there and if it would get supported there. But to give you some hope though, let's zoom out. It is that you can see in the past, every time it dipped to this point in the past, it usually followed with a very, very strong growth after that for the couple months. So that means maybe starting from Q2 or Q3, we're gonna have a really good rally after that. After the really painful dip right now that we are seeing. But this is really every time a very good opportunity to accumulate. Because in the past, you could at least see the rise for the index for at least 30 to 50%, sometimes more. And if it's that for the index, then for individual stocks, it would be more room to grow. So definitely opportunity to watch out for. But still though, it is quite disappointing to see because we saw the bottom in December and January, and it followed up with a very good rebound. Even though the US market had been going through such a heavy correction, it was holding through the storm very well. I was pretty proud of the Hang Seng Index at that time, and right now seems like only war, such scary thing, can happen to drive the Hang Seng Index further down to be touching or even below this trend line, just like what happened back in the financial crisis in 2008. When there is world crisis, the money would likely flow back into the US market from the emerging market. So that's why we can see that the US market had bottomed last Thursday, but a lot of the emerging market had been still dipping afterwards, including some Asian markets or European markets. So for Hang Seng Index, it's a miss that it could not continue the rising momentum because it was really picking up quite some confidence from investors a month ago until the war happened. But for us who believe in Chinese stocks, it might be a good opportunity if you can ignore the short-term wind turbulence. It's hard, I know. Like, take a look at CWEB. It's continued dipping near 10% after the dipping yesterday. We see that the continued sell-off with the pullback today. But at least for the dip we caught last Thursday at the bottom, we continue selling on the days it ran up. And for the newly added shares yesterday, it also got stopped out, right? This is why we have stop loss to protect our shares. Because if 9.8 support was broken, then the next support we should be looking at around 8.7 to 8.6. Look at this trend line, the yellow trend line that has been supporting this 1, 2, 3, 4, 5, 6 again. So I'm gonna choose to believe this trend line one more time. That's why this morning, before it dipped to that low, I said I would add CWEB if it gets to 8.7. And you can see that it touched 8.7 and so far gets a little bit supported. We have reached the lowest of 8.71. So that's why I added again. Let's see if it can hold or would it dip lower than this. Another one I added heavily today is Pinduoduo, ticker symbol PDD. You know I have swing traded this many times already. If you look back to my history, I have bought, sold, bought and sold, and bought again, sold again, and right now I'm buying again. Back then, in January, I had the target price of PDD at 44. At that time, it was still above 50. The whole time it was trading in between 50 to 70s. And I remember a lot of people asked me if it's okay to buy PDD. But I kept waiting because I want to stick with the plan, the target price of 44. And now it has reached my target price. I would of course stick with the plan because the price action looks scary. But if you had the plan before it happened, then there should be no surprise elements. So that's why I bought both shares and call option at my target price of 44. Let's see what happens from here. Do need to warn you though, if it dips below 43, if it breaks the support, next support you're looking at 36, which we hope it doesn't happen. But if the US market continue dipping, it might though. If you have watched my videos last year, I said there are a few sectors that we have to invest in for the upcoming years, and smart agriculture is one of them. Quite an important one, I think. And for the Chinese stocks, I think PDD might be the best one out of all the one we can invest in for smart agriculture. Last year in August, it had announced a 10 billion yuan project for modern agriculture. And the position for PDD is to become the Chinese largest agricultural platform. I think this is getting to be more and more necessary, and I agree with the transformation, the vision, and the strategy from the management, mainly the important leader in this company. And you can see that it is ever since they announced this project, this direction or the new strategy since August last year on this day, that it really started to become an uncertainty for most investors, and they started to sell off. it is just like Facebook and Baidu. Whenever a company decided to change the strategy, it needs to have a process to change investors, change hands from the ones who doesn't believe in the new vision or do not like uncertainties or risk into the hands of the other investors who believe in this new vision or willing to take more risk with the leaders or the management team. So I think this is the whole process of changing hands of investors. For me, I am the second group because I did not like PDD very much before, but because of this new vision and because it aligns with one of my must invest industry to be agriculture, I got more interested into PDD since then. So I have been waiting for the share price to come back to earth. Before it was 200 something and then 100 something and it was still too high and now it's back to earth. I think this is giving us great opportunity to accumulate the shares of this company. I like the leader, I like the management team. See if they can execute the plan as they say. So today I saw the price target reach. I was actually more happy than scared. I don't know if it would dip further, but I still feel pretty good about this investment. Now let's look at the US market, S&P 500. So this week I said it might have a pullback at the beginning of the week and then continue the rebound after. So this week might start more rough and then gets better. So other than the Chinese market or the emerging market, you can see the S&P 500 continue the uptrend, making higher highs and higher lows. What's going to happen from here on? Have we bottomed for real last Thursday? I saw a lot of analysts saying that usually the beginning of the war would be the bottom of the market, especially that throughout the last 2 weeks, there were so many rumors, speculation on the Russia-Ukraine war, so the market already dipped before the war happened. So the day the war actually began, then it might be the timing for the stock market to bottom because all the bad news has been priced in, right? The scare had happened before it happened. So is this really the case? For me, I think this saying makes a lot of sense. Last Thursday was really the most fearful moment. And that's why we saw the market bottom and rebound really strongly after. So this saying that the war begin is the bottom of the market, I think it makes a lot of sense. Does that mean I think the market had bottomed for real last Thursday? I still am not convinced right now. Because I think the Ukraine-Russia war, it is a very scary event, but it is not enough to drive that much influence into the world's biggest economy, the US stock market. The combination of Russia and Ukraine GDP combined, it's not enough to drive the world economy that much, to be fair. So what drives the US stock market the most is still the influence of the Fed. The QE, how the Fed would do the tapering and the interest rate. This is the fundamental of the stock market and also the earnings expectation, etc., right? So that's one thing. Another thing is the intensity between China and US. These two are the world's two biggest economies, so they would influence the stock market much more than Russia, right? So if something happens between these two countries, it would become much bigger influence. So for now, the most important incident or event, we are still looking at the March 15 to 16, the FOMC meetings. This is where the Fed would decide for the first time how the interest rate or the QE policy, they would give out important guidelines. And right now, a lot of people are quite fearful about this event. Maybe less recently, because before war happened, a lot of people anticipate the first meeting, the Fed would raise 50 points interest rate. And because war happened and the Fed thought there is already enough uncertainties in the world right now, so they don't want to add on top. So most likely we are looking at just 25 basis points instead of 50, right? So this is why recently, actually after war happened, the stock market actually got better because the possibility to raise 50 basis points had reduced significantly. People thought, no way they're gonna do it. It's funny, just like when COVID happened and it was so scary in March, the stock market bottomed because the Fed came into the rescue. So it's kind of like the more uncertainties, the more crisis in the world, the better the stock market would perform. But this time, different than the COVID crash, I think it's just temporary. boost to the stock market because we are still at the end of the QE. Rather than back in March 2020, it was the beginning of the QE. So it makes the whole world of difference. Right now, we are still at the end of QE. We're just talking about ending it slower than we expected. That's it. So it's a whole world of difference. A lot of people think or compare the crash right now to the COVID crash, and I still think it's very, very different. We need to differentiate. So does that mean we're gonna crash from here until the meeting of the FOMC meeting until March 15? And then because they announced the bad news of interest rates rising, and then the stock market would bottom at that time because all the bad news would be out. And then we have a V-shaped recovery and then everybody would be happy. Haha. I think a lot of people would expect this to happen, so that's why they would not buy in right now and wait for the FOMC meeting to finish, see how the market reaction is. Maybe it would bottom there and then start to buy in after. So I think this is the normal way to think about it, but since when the stock market would work exactly as how we expect it, right? Usually it's the opposite. So I would say maybe it might be the opposite. That right now we are going to have an up and down ride until March 15, the FOMC meeting. And then we would crash further down because everybody thought the bad news is out already. And when it's the least expected, it would start to crash again and make a new low. My target of this low is still around 3850, still the same. Unless something fundamentally changed, I will update my view. Otherwise, it's still the same. So that is my bold prediction on when is the market crash gonna be next time. Watch it for just entertainment if it doesn't happen, right? Now that's it for today, and if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.